Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets. Apologies for the upload being later than usual. Sometimes I like to pretend I have a social life and upload late, so you might sit there wondering, I wonder if Cred is at dinner or has some sort of social commitment. Whereas in reality, I'm watching my life tick away, candlestick by candlestick. Nonetheless, let's talk about markets. First things first, we have the CPI tomorrow, the hotly contested inflation print. I think at the very least that means short-term volatility. Recently, we have seen the market spike both sides into these data events like CPI, FOMC, whatever it may be. I didn't intend that for that to rhyme, but I'll take it. But after the news event, kind of a couple of hours or just towards the end of the trading day, after spiking both sides, the market doesn't really move much until later in the week. So at the very least, regardless of which way it ultimately resolves, I'm not a huge fan of having short-term stop market orders set around the news event. There's a good chance they get wicked out to no avail, and then there's a clearer trade or a re-entry after that. So I would sort of stay away from those personally. As far as how the bigger picture is developing, if we look on the monthly, you could just use the monthly and be set. So same levels as before, the highest close monthly resistance at 23.3k, lowest close of the entire range of consolidation at 16.5, and we get a very important midpoint and pivot at 20k, which is the summer range. So at the moment, we have a reaction from resistance. The earliest iteration of monthly support is the top of the cluster at 20.5, and the bottom version of that cluster is at 19.4. So all roads lead to 20k. I think if the monthly chart is going to play out, and at the moment it is moving from monthly resistance, so at the very least you should have some understanding of where monthly support is if the time frames are going to be aligned. If there's a move lower in one form or another, it has to hold this 19.5, 20.5 summer range. Anything below that, frankly, starts to look unacceptably dire. By the same token, however, it doesn't mean the market has to go there for support. It's just worth being aware of where the higher time frame levels are. So best case scenario is obviously the market just goes up and there's no deeper pullback, nothing of the sort. But if we do continue to engage with monthly levels, you'd want to see a pullback into the monthly with no acceptance or closes below, and then that would start to look like a higher low before a retest of resistance and hopefully expansion beyond the range at that point towards higher time frame monthly targets. But for now, in terms of the available evidence, we have a reaction to monthly resistance, and monthly support is at 19.4 to 20.4-ish. I think that's fine on its own, but we must look at slightly lower timeframes to be ready for the market if it chooses not to pull back or not to continue. Now, one way in which that could materialize is if CPI, for example, is very constructive and the market starts to reverse off the bat. One level we discussed in the last Thursday live stream was this weekly close at 21.8, 21.9. That is a former range high and would certainly qualify for a very kind of bullish, shallow pullback scenario. Now, the way that would have to materialize if we look at it from a sort of intra-week into the weekly close price action is that the last weekly closed below it, and it's currently being retested as resistance. So you basically want to see that image flipped. And one way it could do that is if there is a failure to break down from the previous week's low, resulting in a push higher that cements a green close back above that weekly 21.8 level. At that point, that setup becomes viable because you have a clear invalidation, which would be the failed break below previous week's low. And again, if CPI, one way or another, it could still push into the low of the week so far. So we are kind of projecting ahead a bit. But in any case, regardless of where the lower wick forms, you'd want to see a close above previous week's low. And that weekly candle not only closing above, but also closing above the level at 21.8. So you'd essentially have a green candle with a wick through previous week's low and a close back above weekly resistance support pivot thing at 21.8, and that would become acceptable as a continuation setup towards a retest of the 23-24k range high. It's not really worth talking about the other pullback levels on the weekly because they all align with the monthly idea of sort of 19, 20k. For example, if we take this weekly market structure level, the high before the lower low, you can see that lines up more or less with that area at sort of 20k, 20.5 to 20.7k, especially if you start to factor in where a reasonable wick might form, you add some discount to that, and you end up in more or less the same price areas. Now, what would be unacceptable, or certainly bearish, is a failure to form a higher low, basically above 20k, 19.5, or above the monthly level in one form or another. If you'll recall, the entire bullish argument and the sort of narrative for this rotation is that we had a summer range sort of at 19k, FTX blew up and nuked the range, and we've since reclaimed that. And ever since the reclaim, that looks like a failed breakdown with some key catalysts, and therefore reclaiming that is a positive sign. If that positive sign goes away, then the bullish argument also goes away, and I think that applies both technically, narratively, fundamentally, in one form or another. So you could make a reasonable argument that we have a clear invalidation that any weekly close below the summer range, sort of 19.2, 19.3, 19.5, whatever you want to call it, any acceptance below that is about as bearish as it gets. So in terms of proximity to invalidation for bullish ideas, you want to get as close to that as possible without nuking structure completely. And I think that's where the alignment of the monthly, the weekly, the daily, etc. is useful, because all of them shine around this 20k handle in one form or another. And anything below that, as we've discussed in previous price action episodes, the probability of double deviations is rather rare. So if this market is going to be bullish, we've already had one deviation. Closing the week back below the level where the deviation took place is usually a continuation signal as opposed to another reversal setup. We've already had the reversal at the level. It has no business closing below that level a second time. The second time is usually the continuation. I'm not sure there's a whole lot else to add when it comes to the Bitcoin chart. I think it's quite reasonable within the framework of where might a higher time frame wick be useful if we're looking at that 20k handle across monthlies and weeklies, is this daily consolidation at 20 to 21. I think especially if the market's prone for volatility, spikes or kind of pokes below into sort of thin news-driven price action is acceptable as far as this support goes. But anything that starts to close below here without a fast reclaim, specifically the lower boundary at 20.7 on a daily time frame, starts to look rather precarious. If you're one of those people who's quite reasonably arguing, well, look, this doesn't make sense to me. We've got news coming up. I don't know if 21 is the level or 20 is the level or how to trade within the confines of this consolidation. I'm just not interested. What would be evidence of strength as opposed to trying to get positioned on weakness? For me, that answer lies at more or less at the breakdown level, which is at 22.6, 22.7. We're looking at this on the 4-hour time frame. It's about as clear as it gets in terms of price action, support, resistance. We had a very long lasting range low here, which has since broken down. Accordingly, if you get a failed breakout or breakdown set up there, where you start getting acceptance and closes back inside that boundary, you just look for invalidation below that range, and then you can either conservatively target the range high of the same consolidation, or at that point look for higher time frame rotations towards those weeklies and monthlies as far as range highs go. So essentially, the takeaway points that I think are useful: first, short-term stops into CPI, probably not the best idea. Good chance the market spikes both sides, and if you're wrong, the move is going to be thin and fast, and your actual fill prices will suck. And if you're right, you could still be wrong if you get spiked out and then the market moves in your favor. So it's just not particularly great positioning into those events. Trading after them is fine. Trading the next couple of days, completely fine. But I just think holding tight positions into news is not a great idea, especially, if your idea is just based on nearby structure. Whereas if you're going to go for buying some sort of flash crash support scenario, those aforementioned confluent levels at 20, I think all make sense at the very least for a reaction or a short-term trade. If you're more of a where does this market start to look strong again, I think there's a clear candidate for that in the form of a 22.6 reclaim. I hope that's helpful. As far as Ethereum goes, similar story with regard to the monthly. We're sort of pulling back from the monthly range high at the high 1600s. I think the monthly time frame is less useful for pullback levels than BTC, given the nature of this consolidation. But we do find some reprieve on the weekly time frame, which I'm not a fan of in its current form. If we look at how the market sort of behaved itself relative to the last high. Not only did we have recurring failure to close above the highest high, all of these kind of spike failed breakout patterns, but even from a point of view of structure, if we look at the highest close, the market attempted to turn that from resistance to support and some closes above, but ultimately closed below in the last week. So this looks like a failed breakout of that high on the weekly time frame. The bittersweet good news is that, as we've discussed ad nauseam, double failed breaks are quite rare, which would suggest that in this instance, if we get a weekly close back above 1600, now that we've already had a fake out, a second one is far less likely, and that would probably yield the real move, or the breakout that comes from a weekly close above is much more likely than a second fake out. So that's a future setup to look forward to on the weekly time frame, with the proviso, of course, that until that weekly close forms, all of that 1600 handle is still resistance. The only other weekly structure that's acceptable to me at the very earliest is this former all-time high, somewhat recent range low at 1400. I think that's a good enough level on the weekly, although I expect if we do trade down into it for there to be a bit of a wick. And the reason for that being is if we look on the daily time frame, this level is certainly choppy in terms of recent interactions, hasn't been particularly pivotal, but I still think it's a good weekly level. And if we bear in mind the idea that weekly levels can have wicks in them and it won't be perfect, then we can sort of look a bit below the level to see what's a decent candidate for that wick, or kind of the location for that wick to form. And we do have the kind of top end of this value area at around 1300s, 1360, 1370. There's a nice little pivot under there where it's not entirely implausible for the market to test there on a very fast move, and then if it's going to be bullish, to offer a weekly close at or above 1400. Obviously, if that fails and we start puking back inside all these ranges, it looks appalling. But I think in terms of weekly structure, the market has a chance at 1400 to cement something decent. I think if 1400 fails, it really starts to look precarious. I'm also aware there's some moving average memes, 200 week, all that type of stuff, seemingly aligned in that area. So a weekly wick below that, as long as the close is above, would also be decently acceptable. The issue with losing 1400 and why I'm focusing so much on it is the following. If that level were to fail, the next level is at 1300, at which point we've retraced essentially the entire breakout momentum candle, which would be a bad look. And even if you do wish to trade at 1300 as a tentative higher low, then 1400 becomes resistance in your first trouble area once again, and the entire kind of structure of the trade is different. So if we're looking for sort of shallow higher low pullback into a decent chance of continuation, then I think in one form or another it has to originate closer to 1400 than 1300, at least on a weekly closing basis. The daily, I'm not a huge fan of in its current form, and I will also add, just very quickly before I forget, if you're looking for failed breakout type of stuff or short to medium term trades based on that type of pattern, I would map out previous week's low and see if someone's willing to soak that up during the course of this week. Because again, if that starts to turn into a wick, you might get a reversion to, at the very least, retest the 1600 level. So just keep an eye out on that for you shorter term oriented punters. As far as the daily goes, this definitely needs some repair work. I'm a fan of the weekly chart because the levels are decently unambiguous. The daily less so. I think at face value, it's worth just mapping out this range low at 1500. And at the moment, it looks like a breakdown from 1500. And you can even just add the green candle within that consolidation as a mini supply zone or cluster. And just like for Bitcoin, we had the 24K-ish or wherever that was, failed breakdown reclaim argument. That would be the first semblance of bullishness if you're looking for strength type of setups. I'm decently comfortable, though not entirely, comfortable enough, I should say, making that argument for ETH. That if you don't want to mess with this type of grindy, inefficient structure and look at choppy levels that haven't done much on the daily and on the weekly as of recent, then the first viable continuation sign becomes a close above 1500. At the very least, then you have the market trading back within the daily range. You have some evidence of a deviation, and more importantly, somewhere to define the risk on your idea and for the market to spend more time in this range, right? So you'd have a failed breakout, breakdown, whatever, back inside the range, and that would be a setup that might take you to the midpoint and to the range high, whatever. But in any case, that argument only becomes accessible above 1500. Understandably, if you don't want to do business here in this kind of messy price action. I think that's all I've got to say, specifically because the ES really hasn't changed much. We're still churning at this weekly and monthly level, and I think either way, CPI will more likely decide which way this goes, and the same considerations apply to our dollar-oriented observations, where we've had a reaction from the weekly range low, and the market is moving towards the weekly range high. Again, CPI comes in hot. Equities will probably puke, dollar strength and vice versa. So a lot of that rides on the data that we have coming up tomorrow. So at the very least, if there's one thing that will likely be helpful from this video, it's that short-term stops will likely get busted in a way that won't necessarily be directional in the short term. So your long can get stopped and the market can go up from there. Your short can get stopped and the market can go down from there. I wouldn't put too much weight in the initial whipsaw. I wouldn't trade into it either. Let the market settle, let the books refill, and then we can take a fresh look at this given the development of at least the daily time frame, if not the weekly as well. That's all from me. If you enjoy Monday Markets, leave a like on the video. Don is thankfully getting better. Clearly, the live stream campaign helped him. There's some definite causation going on there, and hopefully we'll be back in full swing for Wednesday and Friday. Thank you for your support on the channel. I will stop blabbering. Take care and see you in the comments section. Bye bye.